Today, we're diving into a really powerful column by Shankar Iyer that connects the dots between artificial intelligence, a huge stock market crash, and even global politics. Let's get right into it. So, the story kicks off with this absolutely staggering number. In less than 2 trading days, India's IT shares lost nearly 3 lakh crore rupees in value. Now, that's not just a small dip, that's a full-blown shockwave hitting the market. The shock was so huge, traders actually came up with a new name for it, the SaaS-pocalypse. That's SaaS, as in software as a service, of course. The name just perfectly captures that sudden feeling of dread that rippled through the markets, like maybe an entire era for these tech giants was coming to an end. So what really happened here? Was this just a random, chaotic market correction? Or, and this is the core of Shankar Iyer's column, is this a symptom of something much, much bigger, a fundamental tectonic shift that's being driven by AI? Okay, so let's start by really unpacking the crash itself. This wasn't just a blip on the radar, it was a complete reversal of how the market was feeling. It's like years of incredible optimism around tech stocks just vanished overnight. And, as the column points out, this isn't just an Indian story, it's happening all over the globe. I mean, just look at these year-to-date numbers. ServiceNow, down 28%. Salesforce, down 26%. And Intuit, down over 34%. We are talking about trillions of dollars in value just wiped off the mat. The key idea here is that this wasn't random. Iyer argues the market has basically invented a new metric, the AI discount. It's essentially a penalty that investors are applying to any company whose business model looks like it could be easily disrupted by all these new AI technologies. So what is the technology that's driving all this fear? To really get a handle on this AI discount, we need to look at a very specific breakthrough in computer science that, according to the author, literally changed everything. Iyer traces it all back to this 2017 research paper with this, kind of poetic title. This single paper introduced a concept that would become the direct ancestor of models like ChatGPT, and it's the real source of the disruption we're all seeing today. So what in the world is this attention mechanism? Well, think of it like this. It's what lets an AI figure out which pieces of information are more important than others. Kind of like how you focus on certain words when you read a sentence. This mathematical breakthrough is what took AI from being just a useful tool to a truly revolutionary force. And this slide right here brilliantly illustrates the massive leap we've made. We have gone from the autocomplete era, where the machine was, a helpful sidekick, to what you could call the automated engineer era. Now, the machine doesn't just suggest the code, it runs it, finds the errors, and then fixes them itself. It's a total game changer. All right, so we've got the tech, but what does this giant leap actually mean for people? Because, as the author points out, this isn't just about technology, it's about jobs, and it has very real consequences for the workforce. The stakes, especially for a country like India, are just enormous. The IT sector is a powerhouse. We're talking nearly $300 billion in exports, a workforce of over 50 lakh people, and it acts as this huge engine for consumer spending all across the country. Now look at this number, 17. What does it represent? According to the column, in the first 9 months of 2025, the top 5 IT companies in India hired a grand total of 17 people. Not 17,000, just 17. The hiring engine has effectively slammed on the brakes. And Iyer warns this is really just the beginning. As AI starts to automate all those entry-level tasks in coding and law and consulting, he predicts it could completely stall graduate hiring and trigger what he calls a white-collar recession. But hold on, because the story gets even bigger. The author makes the case that this isn't just about corporations trying to be more efficient. It's also about national strategy. So Iyer's big thesis here is that for the United States, pushing for automation is a geopolitical goal. The argument goes that just like the US wanted energy independence to secure its economy, it's now chasing technological independence to rely less on imported labor and lock in its strategic advantage. And Iyer argues this is anything but an accident. It's the result of deliberate, long-term policy. You can see it right on this timeline, from DARPA's challenges for self-driving cars way back in 2003, all the way to strategic AI plans in 2016. The US has been laying the groundwork for this for decades. And the financial incentives are crystal clear. The 2017 Tax Act, for example, gives companies a 100% depreciation tax cut if they invest in machines. But if you hire a person, well, that comes with payroll taxes. The policy quite literally favors machines over humans. So in the face of this global storm, this huge technological change, and these big geopolitical strategies, the column poses one final and really crucial question. Where should India focus its attention? Instead of just reacting to this threat, Ayar proposes a proactive approach. He asks, can India forge partnerships to use AI to solve its own unique, massive challenges? I mean, just imagine using AI for something like predictive healthcare, or to finally fix agricultural supply chains or solve urban mobility problems. And this brings us right to the column's final powerful point. As AI completely reshapes our world, the most critical question isn't about the intelligence of the machines, but about our own. In an age of artificial attention, what we choose to focus on, the problems we decide are worth solving, that might just be the most important human decision we can make.